how to trade without any human emotion. Yes, mechanical, objective, and we're going to use Kadena and Solana as the examples that we covered in the last couple of days, because most people don't realize that you can ignore the fundamentals and just look at the psychology of the buying and selling behavior and make decisions. And that's going to be what's going to take you to the next level where you can increase the probability of success and decrease the probability of losing. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro, been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I used to only focus on currency, but now exclusive on cryptocurrency. So let's dive straight in. So just a very quick recap, right? We did Kadena, KDA, 1, 2, 3, 4, 5, ABC, and we said, look, we're hitting price. It was price, time, momentum, pattern, all coming together to say this is a high probability low where we should see a reversal to the upside. So we're going to do a deeper dive into that. And then this was on the daily chart, but we also saw the weekly chart as well. So we got dual momentum, which means the daily momentum is pointing to the upside. So we're going to leverage that. We've got pattern, which is this structure here. If you're not used to Elliott pattern, I've covered it in my masterclass. It's free. It's in the link below. Price, we cover these Fibonacci key psychological resistance zones, and time. Now, the confusion that a lot of people have, I'm listening to your comments, I'm watching them and replying to them, is people are really concerned about the fundamentals of the project. And that's important. However, short term, like when I'm talking about less than a year, less than 6 months, less than 3 months, especially, the buying and selling behavior is based more on human psychology, profit taking, lows and highs, and the fundamentals are baked into that thinking. So when we see these deep corrections at the 78.6% region, it's telling us that the market's not feeling confident. People are taking profits, but naturally so. So we want to take that into account. So we look for a high probability entry. This is what we did. And we're going to use the tool, the spreadsheet that I created, so you can really calculate the numbers. We're going to leverage that today as well. And then this is what we said, on a 1 bar high, go long and put our stop loss down here. So we are literally saying we're going to risk this amount, which will be 3%, to find out if we're right. If we're right, we make some good money. If we're wrong, we can either break even, make a small profit, or take a small loss. And then we look at Solana, right? But we know that the market, you should know by now, because I've been repeating it over and over and over again, is that the market tends to move in 5s and 3s, A, B, C. And we did this with Solana the other day and said Solana is following this textbook, because bang, this is what we've done. We've been following this for a while, and we look like we're coming towards a typical correction, ABC pattern, momentum on two time frames. We've got price zones and we've got time zones. So that's high probability. Never certainties, but high probability. So what we're going to do now is we're going to jump into a live chart. We're going to start with KDA, right? KDA, I'm just going to get rid of this for a second, and we're just going to zoom right the way in. So this is the pattern of KDA, like we saw. I got a candlestick set up because it's easier to have the 1 bar high, right? As in it's easier to see the bars. And you can see that the price has not exceeded the high or the low. So the order is still active, right? So we go, that's fine, right? So we can do some numbers in a second. We're going to pull up some momentum indicators. Let's just stick with the fast. So what we want to be aware of is that the momentum indicator, the fast line is in the overbought zone, and we've not had the follow through. So what will invalidate our entry to say we will remove our entry if this occurs, and then we'll re-enter at a later date. So if we get a bearish momentum reversal and we have not been triggered into the trade, if the order has not been triggered, we remove the order because now the short-term momentum is sideways to down. We'll wait patiently. It might be 3 days, 5 days. If it takes off, hey, there's going to be another opportunity. But we always just go with the probabilities. And then when we get the next bullish reversal, similar to this one, if the setup is still in play, we then re-enter. So what we're going to do is, because we didn't do it the other day, because it was a new spreadsheet that I created, is we are going to use these numbers to look at the business case, right? Business case, really, really important. So it's mechanical, it's objective. We don't need to worry about the fundamentals. We go, if it turns out this way, great. If it doesn't, then, because short term, it can make a difference. But overall, I used to trade Forex for well over a decade. And I didn't need to know what was happening in the country because the technicals told me what was happening in the country without me knowing, because of the psychology of buying and selling. So we are now going to pull up this spreadsheet. This is the trade management tool. So we're using an example with KDA, 30,000 account size. That's what we're saying here. Let me just pull up this annotation. There we go. 30,000. We're going to risk 3% to find out if we're right. 3% of 30,000 is 900. Entry price. So now let's use KDA. So this was for Solana the other day. We say our entry order is 6.01. So we're just going to put in these numbers in the yellow boxes. 6.01, 6.01. Stop loss is down here. 442. Again, we're just going to use 440, just a bit below. 440. Bam, bam. All right. Then we're going to scroll down and it says, at your current risk tolerance, you can buy 559 KDA tokens. The cost is going to be 3,300. If you do get stopped out, you are going to take a loss of $900. So we're going to sell. So we're going to buy here and sell here if we're wrong, if the market enters us and takes us back out. So that we do have $900 worth of risk in this example. So our trade strategy is sell 50% of our tokens at the first target. We're going to go into that now, which is this zone here. What's our first target and how do we object? I covered this in the video the other day, but just a quick reminder is we say, bang, if the price takes off and it gets into this zone here, we're going to take some profits and we're going to keep it really, really simple at the 50%. So at $10.72, we're going to take some profits. Yep, we're going to sell half of our tokens. Now, there's a few other things we want to take into account, but the main thing why I'm looping this video, because we did it the other day, is it's totally mechanical, totally technical. We do not need to read the white paper or the roadmap and everything else, because that can start confusing the matter. We are now just looking at what is the psychology of buying and selling right now. Yeah, I don't need to know anything with KDA, and I could tell you in advance that this top was going to top out, right? Why? Because there's a 1, 2, 3, 4, 5 wave structure. We had another little wave here. I knew this zone is likely to be a profit-taking zone. And then we're going to get a 78.6% correction, and that's what we got, right? I don't know, I know a lot about Kadena, but I haven't, don't know like the details. So some people are concerned when it comes to Solana, the challenges that they're having, this, that, and the other. I go, look, it's gone through a massive correction. We want to be aware of that. So if Kadena, correct me, is it Kadena? Kadena, I think it's Kadena. I know I've been saying it too close to Cardano, right? So we're saying the first target is $10.72, $10.73. Let's just round it up. All right, so we're going to say in here $10.73. Boom, boom. And we're saying if we are wrong on our second position, we will have our stop loss at break even, which will be at 6.01. Because when you exit your first half of your position, you move your stop loss in your second position at least to the entry order, entry point, which means you make pretty much zero on this position and you make your money here. So it means we make 4,600. So we still make a 5x on the amount that we risked, even if we're wrong. Now, if we're right, and it's not about being right or wrong, because we don't have that information. We just have to go with the probabilities. And if you do this consistently enough, that's the objective, is to trade consistently. If we hit our first target of 1.618, if it does, and if being the operative word, it's around $44. Then if we put in $44 on exit 2, then we'll make 15,000, which is a 17x. So that's, in this case study, it's 51%. So we got a portfolio size of 30,000. 51% of 30,000 is 15,300, and that will get added to the position. So this is the business plan, is the map and everything else. Solana we want to now look at, because what I want to really emphasize is, what if the trade doesn't get triggered? What do you do then? So we covered that information. By the way, if you want access to that tool, I created it for you. If you've already bought my Fibonacci and Elliott Wave Masterclass, or bought the course, the Masterclass is free. By the end, I give you the option to buy my Masterclass, my full course, which breaks down the foundation, intermediate, and advanced of Elliott Wave, foundation, intermediate, and advanced of Fibonacci. There's now an extra section called risk management where you can download that tool, because it just makes your life a lot easier just to plug in those numbers, because sometimes it just gets too emotional when you're thinking too much. Now with Solana, the order should still be in play, because what we've got now is the momentum is still bullish. Again, what we said the other day, literally yesterday, I just want to do a quick update, listen to your comments, is this was our order on a 1 bar high. You can actually move your order 1 bar lower now, because the 1 bar high is now here. So now we get a tighter stop loss. So that's actually better for us. And the low hasn't been taken out, so the low stays the same. So now all of a sudden, we actually have a slightly better business case for Solana. The momentum is still bullish. Yep. So everything's still in play. There's nothing that's changed since yesterday, other than me reading your comments and you reminding me, there's some challenges with Solana. It's been down. It's been this. I go, look, what we're doing here is technical analysis, technical trading based on human psychology, buying and selling behavior. And this is the most common typical patterns that occur. And we don't need to even concern ourselves with what is and what is not happening. But taking into account, we've had a big correction, massive correction, so we want to take that into account. So Solana, now let's just update our entry. The other day it was up here, which was 104. Here we are now on 99.83. So now let's just do the same for Solana when it comes to the spreadsheet. What did I say? 99. We said 99.83. So we'll keep it bang on 99. Let's just say 100. Bam. Let's just round it up. Stop loss stays the same, which was 83. So let's just keep it as 80. So this tells us straight away we can buy 45 Solana tokens, which cost us $4.5 grand. Our risk is $900, which is 3%. And then exit one. Again, I think I still got it in play. Have I got it in play? Maybe I deleted it. I did. Let me just put this back in, which is the retracement of the wave C. That is wave B high to the wave C low. And what we're looking for, let's do that again. There we go. Bang. We're going to keep very, very, very conservative. $143. $143, which is the 50%. So we're almost basically being very conservative and say, did I say 43? Yeah, $43. To almost prepare ourselves for the worst case scenario. Let's just say the second position was break even. So then we know we still make 18% of our entire portfolio when we're wrong. We make $5,500 by risking 900 when we're wrong. That's the aim, to make good money when you're wrong. And when you're right, you make really good money. So if we're right and Solana does take off and it does do a full wave 3 at the 1.618, which is this zone here, 504. 504 is our second target. 504. And then we can say in this business case, we now make 49% of our entire portfolio, 15 grand, which is around a 16, 17x thereabouts. So that's our business case. So the main thing for today was there's nothing that's changed. It could be new news, could be this, that, and the other. But from a technical standpoint, the order on Solana, we moved it from slightly higher up here, but now the risk has gone down, so it goes here. Well, the risk is still the same, $900, and you can adjust that if you wish to do so, but the stop loss is tighter, which means we can buy more Solana tokens because we're getting at a lower price. We're getting in closer to the market. And then if there's a lower the next day, again, then the order will go here, as long as the momentum is still bullish. Now, if the momentum turns bearish, so let's just say it reverses to the downside, then you remove the order, wait for the next bullish reversal, and if the setup's still in play, momentum, pattern, price, and time, then you can re-enter the order. So hopefully that makes sense. And if you want a copy of this, it's a cool tool. I'm actually trying to make it even better, but it just kind of gives you the high-level risk, your potential exits for 1 and 2, the risk-reward ratio, and the total return on the entire portfolio. So it's a 17x for the position based on your risk, but it's a 49% of increase if it goes our way. So then you can kind of do the math that we only need to be right 20, 30, 40, 50% of the time. And the other 50%, if we make a small profit, break even, or even take a 3% loss, then we're still doing good business. And taking a loss is a part of doing business in the game of trading. So there you have it. Today was short, sweet. I just wanted to do a quick update on Solana, on Kadena, because it's technical trading, meaning that we're just looking at the price action. So that means you can show me any chart. I do not need to be familiar with the project. Often when you put in your YouTube comment and I'm not familiar with the token, I'll literally just jump onto CoinMarketCap because it's a bit faster and I'll just get a quick visual and I'll look at the chart pattern and I can tell you straight away, bam, it's coming up to a wave 5 high, get ready to take profits, or it's doing an ABC correction, wave 2, bam, there might be a potential good entry point. Let's look at the momentum. Let's look at now the details. When you, do you get what's happening with the project? I go, I don't know. But that particular one, I go, I don't know what it is. I haven't looked into it. But from a technical standpoint, you can tell the volume's there, the interest is there, and the buying and selling behavior is there. So we're aiming to measure buying and selling behavior, and our entry and stop losses is based on buying and selling behavior rather than what's happening with the project. Because sometimes that can actually confuse the matter. Yeah, because the psychology of how people are feeling about the project is baked into the price. That's what I'm trying to get across. Right, let's finish on a quote today. Today is very important, very important. This is why we're doing it in a mechanical, non-emotional way. It's objective. Rule number one, never lose money. Rule number two, never forget rule number one. Warren Buffett. Really important that you find your way of being consistent, mechanical, non-emotional, right? I personally don't watch the news. I go, if I need to know about it, someone's going to tell me about it, especially when I'm doing technical trading, because the news can almost create implant a virus. So then you're not seeing the technicals, you're seeing the news, and the news is often just noise, fear, uncertainty, and doubt, fear of missing out, optimism, pessimism, fear and greed, and all the rest. I don't want to hear that when I'm doing my technicals. I just want to look at, right, is that a wave 5 high with momentum, price, pattern, time, boom, I make my decision. It's doing an ABC correction like Solana, like Kadena, because it's ABC textbook from a dual momentum, pattern on 3 degrees, Fibonacci ratios on 3 different wave counts. And if there's a time ratio as well that helps coincide as the typical time length, then we go, okay, this is looking good for a long order. But if I'm wrong, this is how much I'm willing to risk to find out. If I'm right, I make this much. If I'm wrong, I still make this much. And or risk management is what we're talking about. And if I'm really right, it goes like this. So that's what I'm trying to get across to you. Take my Elliott Wave and Fibonacci Masterclass. It's absolutely free. If you buy my course, you'll get the download of this as well. You also get an invite to my private Telegram. We do workshops on the weekend, and I'm doing more and more things to increase and help increase the probability of you succeeding, because we are playing the sport of crypto, especially if you're trading and investing in crypto and people are buying and selling. Well, you're competing against other people. So you have to upskill yourself to make sure you're on the winning side to increase those probabilities. But as we know by now, never certainties. Like, subscribe, hit the bell notification, and I'll see you soon.